Great, we got through our budget. Now we're going to move on to our credit. So let me educate you on best ways and best practices to make sure you're ready to go on the credit piece of everything. So first of all, what I want you to do is subscribe. I want you to subscribe to a service. You pick which one, it doesn't really matter, but just subscribe to one like Credit Karma, Experian.com. You can even go into myfreecreditreport.com and get your credit report pulled free one time for every 12 months. You can get that done. It doesn't give you your FICO score though, but at least lets you know where you are with your debt and everything like that. So go through those things, figure out what is your FICO score? Where are you with everything, right? Are you going to be okay, right? So just get an idea what those are. Now I'm going to tell you that the FICO score that you get from these places is not going to be the same FICO score that we as mortgage lenders go by. We use a different algorithm. Ours is a little bit more strict. So a kind of a rule of thumb, if you're coming up with a 700 FICO score through Credit Karma, we'll probably be somewhere between 660 to 680, somewhere in that range. It won't be the 700. So it's important to understand what that is. I know they're trying to figure that out right now and get everybody on the same algorithms, but car dealerships, like Home Depot, Visa cards, mortgage lending, we're all in separate algorithms when it comes to FICO scores, and it's kind of confusing. So let's make sure that you just at least start there and figure out where you are, right? Just get an idea. So once you've done that, how you doing? How are things looking? Look through everything and determine what is your FICO score that comes up on that. So let's say you are a 780 FICO score through Credit Karma. You're like, woohoo, 780, I'm great. Yeah, that's perfect. That's really good. That means you're doing really good. That means you're paying your bills on time. You know, you got a nice established history with your credit, things like that, and it's going very well for you. So that's really good. Congratulations. Now, if your FICO score is coming at a 550, let's say, well, we need to look at that and see what is happening with your credit score. So, because I want you to aim, I want you to try to go for 740, just like school, right? You start school off, you're like, I'm going to get the A. I'm going to do everything I can to get the A. You're not going to start off going to school, at least I hope you don't, at least I try to tell my kids this at least. Don't start off school and go, I'm just going to be a C student and I'm just going to get by. No, go for the A. Go for the best you can be, right? Go for the highest you can be, because if you can get a 740 FICO score or more, guess what happens? Your mortgage interest rate is lower than the same person who had the exact same everything else scenario, but his FICO score, if you're 640 and he's a 780, guess what? He gets a lower interest rate than you do because your FICO score is different. So we really want to try hard to get a 740 or above, okay? So how do we get there? First thing I want you to do is go through your credit report. Do you have at least 3 credit trade lines open with at least a 12-month history? So that means like a credit card, maybe you got a car loan. Those would be the 2 major things that I really want you to do. I don't want you to go out there and go blast and open up everything. I don't want you to go open up, you know, the latest department store credit card just because you get an extra 15% off or they promise you this or that. And don't do that. Go get yourself a regular Visa card or American Express or MasterCard. Stay with those 3 and get one and go for the highest limits you can afford, and then just get at least 2 of those, and then maybe an installment loan like a car loan. So I've got a couple people that have come in from out of country that are working here at the TSMC factory, and we've had to help them reestablish their credit and get them started. So we've had them open up 2 credit cards and get a car loan. And so even though they could have paid cash for everything, they're used to paying cash for everything, I still need to get them set up with the right credit, okay? So 2 credit cards and 1 car loan, okay? And then try to keep those open for at least 12 months history. That's what we're looking for. Now, can we get a loan for less than 12 months history? Yeah, there's options out there. But again, we're trying to go for the optimal A+ score for you, okay? So 12 months trade lines, 3 of them. Try not to go any more than that. You don't need more. You really don't. You don't need more than 2 credit cards. People might argue and say you need more. No, you don't. Stay within your budget, which we were talking about over here. Stay within your budget. Use your credit cards for maybe like gas and then pay them off every month, things like that, right? And then your car loan, just get the lowest rate you can and then pay that off so you're establishing some really good credit, okay? All right, next question. Look through every one. Let's say that you're the guy with a 550 FICO score and you've got 20 accounts open. Look through every single one of them And look, are you paying them on time? Do you have any 30-day, 60-day, 90-day lates on there? How recent was it? And just really figure out what that was. First of all, are you paying them on time? And if you're not paying them on time, figure out how to pay them on time. You got to get current, and that's really important. So let's say that you were late last month. Well, your FICO score is going to take a big hit because of that late. Just report it, right? But if you were late, let's say 3 years ago, and you're current now, and you've been current for the last 3 years, that's not going to have as much impact on your FICO score as the person that just went late last month. Okay, so look at it and see, where am I? When was the last time I was late? How many months has it been since then? Hopefully you're at least 12 months or more that you haven't been late on anything. So let's make sure you look at that. Credit cards. So this is really important. Keep your balance to limit ratio to 30% or below. So what do I mean by that? Let's say you open up your Visa card and you have a $10,000 a month, or excuse me, a $10,000 limit, and you decide, okay, I'm going to use my card, right? Well, don't spend more than $3,000 of that. So 30% of $10,000 is $3,000, okay? So try not to charge any more than $3,000, and don't let the interest accrue above that, because that algorithm, again, is going to turn around and read that adversely and say, oh, time out, this person's got problems, they're getting into debt, and it's starting to snowball, and the higher they are to that limit, the more risk you become, okay? So try to keep your balance below 30%. But if you can, pay off your credit card every single month. That's the best thing you can do, right? I know you want to get the miles, you want to do all those different things and the rewards, and I understand that. I have credit cards, I do the same thing. Like my City Costco card, for example, I love that. Okay, but try to pay it, keep it below 30%, and try to pay them off every single month if you can do that, okay? All right, next thing, student loans. Okay, a lot of you may have student loans, right? And you're going to tell me, well, Dan, I'm not going to worry about that, government's going to pay for them, whatever. No. You have student loans out there. Don't count on the government wiping them off, unless you got a special plan that you're been in the military, or you're a nurse that's been in the field for 20 years and they're going to wipe them off. Things like that, those are real, but don't count on promises of those things being paid off. You're going to have to pay them off, okay? So start paying them now. Call your student loan company and get on a payment plan, and they'll do an income-based payment plan for you, and start paying them off, okay? Start reducing those debts. Get those paid off as soon as you can. It'll be a burden off your shoulders once you can get that done, okay? So get that started, because if you don't have a payment listed on your credit report, we as a mortgage lender have to calculate a payment. And I get people asking me, well, yeah, but it's in deferment, Dan, or I'm in forbearance, so I'm not making any payments. I don't have to make any payments, so you shouldn't have to calculate a payment for me on my debt to income calculation, right? And the answer is, yes, I do. The rules have changed, and we now have to count your student loans. And if you don't have a payment listed on your credit report, then we have to count about 1% of the outstanding balance, okay? So figure out 1% of whatever your balance is, and that's the payment that we have to make. That can get pretty high, right? So sometimes if you do the income-based one, that's a lower payment than what we would have to calculate. Now, FHA and Freddie Mac tell us their rule is 0.5%, and that's a nice way to go. So you typically will just run you here, right? So we don't have to calculate as much of a payment, but my experience has been, start paying on them, you get a lower payment there anyway, and it'll go much better for everybody. All right, if you find you've gone through this, you're like, yeah, I got some derogatory credit here. It's okay. It happens to all of us. It's all right. Look at it and figure out, okay, what is it? Do I have a collection? Do I have, whatever it is, right? There's so many things that come up. Let's just say you got a collection out there, and it's non-medical collection. It's a cell phone big company that you had a dispute with, and you're frustrated with them. You're like, screw them. I'm not paying that bill. Well, that's going to hurt you when you go to buy a mortgage, because now that's a late. The credit agency, they don't care, because they reported you, and that's reported on there, so you need to pay it off, right? So you look at your derogatory credits, figure out which one has the lowest balance and which one has the highest balance. And my advice to you is take the smallest balances first. So if you have a $300 collection and you've got another one that's a $8,000 collection over here, and you got a couple in between, start with the small one first. Pay that off. Get a letter from the creditor on their letterhead saying that it's been paid off in full, and keep a record of that because you're going to want to have that later in case it doesn't show up and reflect properly on your credit report, okay? So make sure that happens, and then graduate yourself up to the higher collections and go from there. So that's it in a nutshell right here on your credit. So as you can see, credit is really important in this whole process. Again, it all comes down to your FICO score, and our goal is to get you to a 740 FICO score, okay? So if you're not sure where you are, subscribe to these guys right here. You'll get a pretty good idea where you are. Go through all your accounts, make sure your 12 months history, you got 3 trade lines, 12 months, everything's paid on time, and anything that's bad in there, you've got it all cleaned up and taken care of, and that's your best step to get you to the next step. So first step, determine your budget. Number 2, figure out your credit, and now we're going to move on to number 3. Stay tuned.